Hey everyone, this is Mike Kramer checking in. Today is October 24th. It's around 8 o'clock New York time. So, right now we're looking at the Hang Seng Index. And the reason why I'm bringing up the Hang Seng Index is because I want to review the DAX and the FTSE and then move into the US indices. But sometimes when I look at charts and I'm a little bit confused by them or not really sure what the messages are telling me, I like to look to other markets, especially the markets that are more closely correlated to some markets or have some sort of overlap with others. And obviously, Germany, a big exporter to China. So right now we're looking at the Hang Seng Index, and one reason we're looking at that is because when we look at the DAX, you can see when you start overlaying it, a lot of the pieces start coming together, and it starts telling us a little bit of a story of maybe why the DAX has been so weak. You can certainly see that there's a relationship here going back to call it June of this year. And we can see that Hang Seng has obviously been very, very weak over the last couple of months. And that's because we've seen, a lot of weakness out of the CSI 300 out of China. And you can actually see it made a new low, breaking below the October lows. And what's interesting here is that, now that this support level has broken, when we go back and look at this point in time here, you can see there's really just kind of this straight line up. And you have to wonder, is there really any meaningful support in this region if we were to start really seeing, the CSI 300 really start moving away from that support level? And again, this could have, ramifications and impacts to the rest of the world. You can see it's about another 7% lower from here. So certainly not a huge decline, but 7% on top of the declines we've already seen is pretty significant. The one thing I will note here is that CSI 300 already very oversold. The one thing that is worth noting, though, is that the Hong Kong Hang Seng Index is not currently very oversold. And this index actually isn't really nearly as low as the CSI 300. You can see it about another 5% to get to this level here, which would be a gap fill from back in November, right around the time when the S&P 500 and the US market started to move higher. And again, the same relationship exists also with the FTSE 100. The relationship with the FTSE 100 actually goes all the way back to October of last year. And again, you can see the weakness and the overlap. And again, you can also see that even when you look at the Australia 200, very similar looking index. And again, the FTSE 100 has a lot of, miners in it as well. Obviously, Australia has a lot of miners. Both are heavily, both miners, commodity driven type of companies, obviously heavily tied to China. So what we're seeing in the DAX and what we're seeing in the FTSE appear to have, a relationship to that of what we've been seeing out of China. And what's interesting here is that, the DAX broke through support at 14,900. And now today it came back up and tested that support resistance zone, and that hasn't really worked to this point. And so, it tells us that there's this, this big run up in this period of time going back to January of this year in the DAX. And again, this is another area in here which could offer a consolidation zone. So when we look more closely at the DAX, we can see that if there's an opening tomorrow that allows us to get above today's highs around 14,900, then we're talking about a chance to fill the gap back up to 15,043. But at the same time, if this is resistance and we are not able to penetrate this on the way up tomorrow, especially very early, then I think you're looking at a retest of this 14,600 level on the DAX coming sooner than later. And then really it sets up potentially something more, maybe into this 14,400 area, which is an area of consolidation right here at 14,450. And so again, this is really the big level, 14,600, important level. If that breaks, it sets up a steeper decline. Meanwhile, if we get above resistance at 14,900, you can probably see a move back up to 15,032. And really, the Asian markets may tell us exactly which way, some of these indexes may be moving. When we look at the FTSE, it has also this sort of convoluted message in it, not really very clear in terms of what's really happening, because all we've been doing is just chopping sideways. in these big ranges over the last couple of months. And again, this has been the upper bound, 7,700 or so, 7,300. It's been the lower bound. Really, until we break the 7,300 level, that's really the level that seems to be the most important at this point. So when we look at it from a closer standpoint, you can see again that it looks to me, I had mentioned this the last time, that the FTSE looked more bullish out of the other indexes, but the FTSE didn't really respond in a bullish manner. And again, if we're sort of looking at the FTSE, I mean, there's a chance here that we could be looking at uh, an inverse head and shoulders pattern. And what we need to see here is a move higher above this 7,403 level tomorrow, because I think that will ultimately open up a pathway to maybe retesting 774.65. Likewise, if this is not taken out early tomorrow at 7,400, what this could be telling us is that the next leg lower is coming for the FTSE, because sometimes when inverse head and shoulders patterns don't work as reversal patterns, they can be continuation patterns. And we would then think that 73.50 would be the next important level of support, with another level of support at 73.25. And if 73.25, then you're talking 7,300. This is an important area to watch tomorrow. And I think if you have more weakness coming out of Asia tonight into tomorrow, I think that could kind of tell you a little bit about which way these markets may be looking to go tomorrow. When we look at the Dow, if you remember last week, we were talking about this rising flag and how it suggested we come back down and retest this level here. And that's exactly what's happened to this point. Coming down, we hit this level of support right here at 32,980. And so far that level is held. This is an important level of support, because if this level breaks, it's going to lead to sharper declines, because you can see right here below this 32,980 level, there's some support in this 32,600 level, but then there's really nothing again until 32,250. Really, what's going to again, tell you and give you a clue in terms of what's going to happen tomorrow isn't so much taking out this high, it's taking out this high at 33,275. And at least to this point, all we've really done is just trade sideways, and the highest as we've been able to get is here. So until this resistance zone around 32,250 is taken out, we have to think that there's really not much positive momentum going on here, and that we're more likely than not to see this test this 32,985 area. And on a fourth test, the odds increase, obviously, of that level breaking. So when we look at the NASDAQ 100, obviously has traded down sharply. We've come down to the lower end of the range, which was something, we had talked about. Now we've had 2 days that have been up, but in reality, we haven't really gotten very far. First of all, this has been a level of resistance now for some time. Second of all, we moved higher today. Then we had a big sell-off, filled the gap from the early morning opening. Then we continued higher, and then we weren't even able to close over any of these intraday and morning highs. And in fact, we closed just around the highs of Monday's midday highs. What we're talking about here is wanting to get above this 14,775 level. Anything less than that, I think, is going to probably result in another failed attempt to move up. And I think it's going to result in a retest of this 14,620 area. So for the S&P 500, we've seen, 4 tests now of this 4250 area. We haven't been able to get above it on 4 attempts. So really what this is telling us is that either the market has to gap above this 4250, 4260 region tomorrow, or I think the next significant leg is going to be lower. Because when we look at this pattern, what this looks to me like is this looks like a 1, 2, 3, 4, and this looks like a consolidation wave with another 5th wave coming. So this doesn't look like a bullish type of setup to me. In fact, it looks like a triple type of top where you're going to come back and revisit this 4190 area. And once you get back to here, there's potential to go lower still. Again, the big long-term uptrend is broken. We're not really seeing much in terms of momentum. It's still fairly negative with these moving down. And again, this just looks like an incomplete pattern at this point with another leg to come. And it would probably, I would be looking for 4177 or so to be where the completion area is. So that's really all I have. Thanks and have a great rest of your day. Bye.